Hi friends, I welcome you to today's session on 5 MCQs on securities market, and the topic for today is going to be delisting of securities. So friends, we have been working in this direction of guiding students for competitive examinations for the past few years, and we have been blessed with some of the very amazing results. In RBI Grade B 2017, 27 of our students, they made it to the final list. And in NABARD Grade A 2018, 20 of our students, they were selected in the final list. And RBI Grade AB 2018, the final result is still awaited, but again we are positive on this front also. Now before directly jumping onto the questions, let me quickly tell you about the courses which we are presently running for SEBI Grade A 2018. So we are offering these courses. You can avail the course for Security Market Phase 1 and Phase 2. Or you can also choose the Phase 1 mock test along with this Securities Market course. And there is this full course for Phase 1 and Phase 2 of the SEBI Grade A. So you can choose as per your requirement, and also you can avail attractive discounts by using the codes given below. Now, in order to channelize your preparation in a better way and in order to prepare you for all the related competitive examinations in one go, we are also providing some combo courses for SEBI, RBI and NABARD. So you can choose the combo courses also if you are preparing for all these examinations. Again, you can avail discounts by using the discount codes mentioned here. So friends, let's start with the first question. Which of the following is incorrect with regard to delisting of shares? Options are: it means permanent removal of securities of a listed company from a stock exchange. As a consequence of delisting, the securities of that company would no longer be traded at that stock exchange. A company cannot voluntarily delist its securities. None of the above or all of the above. So friends, this is a very basic, very simple question on the concept of delisting of securities. So delisting of securities, it means permanent removal of the securities of a listed company from a stock exchange. So if the securities of a company, say Reliance Limited, they are being permanently removed from stock exchange, say Bombay Stock Exchange, then this would be termed as delisting of the shares of Reliance Limited. Now, as a consequence of delisting, the securities of that company would no longer be traded at that stock exchange. So now you can no longer buy and sell the shares of Reliance Limited at Bombay Stock Exchange if this delisting happens. Now, delisting can be voluntary or compulsory. So it is not necessary that delisting should be done by the stock exchange or any outside agency. It can be voluntarily done by the company also. Now, with regard to delisting, SEBI has come up with these regulations, and these are SEBI Delisting of Equity Shares Regulations 2009, and they deal with the different compliances which are to be done during the delisting of securities. So friends, now we can easily answer this question at that the option number 3, which says company cannot voluntarily delist its securities, is incorrect, because the company can either voluntarily delist its securities or delisting can be done by the stock exchange if certain conditions they are fulfilled. Next question: which of the following is the correct? Delisting of shares differs from suspension of shares. Suspension of trading in securities means that no trade can take place in the securities of the company suspended for a temporary period. Suspension is done at the instance of company on such a request being made to the stock exchange. Options are 1 and 2, 2 and 3, 1 and 3, all of the above or none of the above. So friends, it is important to distinguish between these two terms, that is delisting and suspension. So delisting differs from suspension, which is withdrawal of the securities of a listed company for a limited period from stock exchange. So suspension of trading in securities means that no trade can take place in the securities of the company suspended for a temporary period. So for this particular temporary period, no trade can take place in the securities of the company. Now, this suspension is not done at the instance of the company. It is done as an action by the stock exchange against the company because the company did not comply with certain listing conditions. So if the company is not complying with certain conditions which are there in the listing agreement when it got itself listed on the stock exchange, the action which can be taken by the stock exchange can be in the form of suspension of trading in securities. So it is not at the instance of the company, but it is an action taken by the stock exchange. On the other hand, delisting of securities means removal of the name of the company from the stock exchange. So if we talk about delisting, we are removing the name of the company from the stock exchange, and no trade can take place in the securities of the company which have been delisted. So friends, now we can easily answer this question that the 1 and 2 statements, they are correct, but the third statement which says that it is at the instance of company, this is incorrect because it is at the instance of stock exchange. So the answer is going to be option number A. Next question, in which of the following cases delisting of securities from stock exchange is not permitted? Options are pursuant to a buyback of equity shares by the company, pursuant to a preferential allotment made by the company, if a period of 5 years has elapsed since the listing of that class of equity shares or on any recognized stock exchange. Options are 1 and 2, 2 and 3, 1 and 3, all of the above, or none of the above. So friends, we must also remember that there are certain situations, there are certain conditions in which the delisting cannot be allowed or cannot be permitted. So what are those conditions? Let's take a look at these conditions one by one. So first is pursuant to a buyback of equity shares by the company. So if the company has bought back the equity shares, then it cannot just come up with this proposal of delisting, because then it should have come up with this proposal in advance only. It should have gone for delisting rather than going for buyback. So if the company has recently gone up with this buyback, it cannot go for delisting. Pursuant to a preferential allotment made by the company. A preferential allotment means when you are allotting the securities of the company to certain specific set of persons on a preferential basis. So this is more or less similar to private placement of securities. So if the company has issued these securities on a preferential basis to some outside investor, it would make no sense to now delist those securities, because then they would lose much value for that person who has been allotted the securities on a preferential basis. So in this case also no delisting can be done unless a period of 3 years has elapsed since the listing of that class of equity shares on any recognized stock exchange. So if the company has recently issued a set of securities, it cannot delist that securities just now. It has to wait for at least a period of 3 years for delisting those securities. Further, if any instrument which is issued by the company which are convertible into equity shares, they are sought to be delisted are outstanding. So for example, if the company had issued convertible debentures, so they were to be converted into equity shares. So now the equity shares, they cannot be delisted because that would be kind of fraud for the persons to whom these convertible debentures have been issued. Further, the 3-year requirement and the bar on delisting if convertible debentures remain outstanding, they are not applicable. So the condition number 3 and 4, they are not applicable if the equity shares, they remain listed on any recognized stock exchange which has nationwide trading terminals. So if the shares, they are not being delisted from all the exchanges and they would remain listed on any recognized stock exchange with nationwide trading terminals, then the delisting can be done. So now we can easily answer this question that the statement numbers 1 and 2, they are correct, and the third statement, this is incorrect, and the correct one would have been that 3 years have not elapsed since the listing of equity shares. So the answer is going to be option number A. Next question, if after the proposed delisting, the equity shares would remain listed on any recognized stock exchange which has nationwide trading terminals, options are exit opportunity must be given to public shareholders in all the cases, no exit opportunity needs to be given to the public shareholders, exit opportunity needs to be given to those public shareholders who approach the company within 30 days of public announcement of delisting, all of the above, or none of the above. Now let's learn about this concept of voluntary delisting from exchanges in order to reach the answer of this question. Now, a company can voluntarily delist its equity shares from one or more recognized stock exchanges. And if the securities they continue to be listed on one or more of the other recognized stock exchanges. So this means that company is only delisting its securities from Bombay Stock Exchange and not from National Stock Exchange or vice versa. So if this kind of an arrangement is there, then if after the proposed delisting, the equity shares would remain listed on any recognized stock exchange which has nationwide trading terminals, no exit opportunity needs to be given to the public shareholders. So this is trying to say that if after the delisting, the shares would be continue to be listed on National Stock Exchange, which is a nationwide trading terminal, then we do not provide an exit opportunity to the public shareholders. And if the securities they would not remain listed on any recognized stock exchange having nationwide trading terminals, then the exit opportunity shall be given to all the public shareholders holding the equity shares which are sought to be delisted. So this simply means that if now the shares of the company they are not going to be available or trading for trading on any stock exchange with a nationwide trading facility like BSE or NSE, then in that particular case it makes more sense that the public shareholders who are holding the shares of that company, they are at least given a chance prior to delisting that if they want to exit from the company by selling their shares, they can do so. So that's why this has been introduced and this has been put into the SEBI regulations. Now when we talk about the recognized stock exchange with the nationwide trading terminals, we are simply talking about Bombay Stock Exchange or National Stock Exchange or any other recognized stock exchange specified with this regard by SEBI. So friends, now we can easily answer this question that if after the proposed delisting the equity shares would remain listed on any recognized stock exchange with nationwide trading terminals, no exit opportunity needs to be given to the public shareholder. So the answer is going to be option number B. Now let's move to the next question. Dash may by order delist any equity shares of a company on any ground prescribed in the rules made under section 21A of the Securities Contract Regulation Act 1956. Options are Finance Ministry, Registrar of Companies, Stock Exchange, Securities and Exchange Board of India, or none of the above. So friends, in the previous question we learned about the concept of voluntary delisting. Now in this question we are going to learn about the concept of compulsory delisting. Now as per the compulsory delisting regulations, a recognized stock exchange, it may by order delist any equity shares of any company on any ground which is prescribed under the rules made under section 21A of the Securities Contract Regulation Act of 1956. So there are some conditions which have been specified under the Securities Contract Regulation Act 1956, and if these conditions they are fulfilled, the grounds they are satisfied, then the stock exchange it may pass an order and delist the equity shares of a company. However, no order shall be made under this sub-regulation unless the company concerned has been provided a reasonable opportunity of being heard. So first we must provide a reasonable opportunity to the company that if it has anything to say, it must say it. Otherwise, we are going to delist the securities of that company. Now the order of delisting. Now this order, before it is passed by the recognized stock exchange, it is necessary that a notice is given in one English national newspaper with wide circulation and one regional language newspaper of the region in which the recognized stock exchange is located. So this notice should be related to proposed delisting and it should give a time period of not less than 15 working days from the notice. So during this 15 days time period, representations may be made to the recognized stock exchange by any person who is aggrieved by this proposed delisting of the company. And this notice, this order, it shall also be displayed on the trading systems and the website. So the notice it shall also be displayed on the trading systems and the website of the stock exchanges. So friends, now we can easily answer this question that stock exchange may by order delist any securities of a company on any ground made under the section 21A of SCRA Act 1956. So friends, this was all about our discussion on some of the very important MCQs pertaining to the securities market. And if you have any query or you wish to know more about our courses, you can visit our website, which is www.edutap.co.in, or you can drop us a mail at hello@edutap.co.in, or you can call us at 8146207241. So friends, if you found this video useful, please like the same, share it with your friends, and subscribe to our YouTube channel. And if you wish to get regular updates on Telegram, you can subscribe to our Telegram channel, the link of which is given here as well as in the description to this particular video. And subscribing to our Telegram channel is also going to help you fetch the PDFs of all the discussions which we are doing on YouTube. So thank you friends.